Hey, good afternoon. It's Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comments. A lot to cover here today. Basically, it's recovery. After losing 90 cents in 38 days, spot corn, clawed back pretty much exactly half of it, $4.44 today. 46-cent rally off those lows. Dees corn traded as high as 64 and 3/4 today after right in front of the number. If you remember, the funds in the middle of the night took it down to 425. So 425 to I'm going to call it 465. I mean, that's just, 40 cents here in literally 1, 2, 3, 4 trading sessions. So it's a recovery. It's a mulligan. Are we going to go back to 505? I don't know. I hope so. Where we're going to be a month from now, it all comes down to weather. It comes down to pollination. The next 12 to 14 days, pollination is going to be very, very, very important. We know of one thing: the managed money. They are wrong again, guys. If you calculate it, they lost 40 cents or so. You do that on about at least 50,000 contracts, 40 to 50,000 contracts. They lost about $80 million in 4 days. So if your wife or husband or spouse or whatever is mad at you because you've had a couple dingers, you can share that with them, the managed money. And the reason we know that, we get the commitment traders every week. As of last Tuesday, they were still short about 40,000 contracts corn after having been short about 70. Now, even if they're short less than that, it's still a chunk of dough to lose that. And we'll see. Are they going to buy it all back and get long at the top? I hope so. You got to remember, back in May, before we broke, they were long 300,000 contracts of corn. They were a big part of the reason we got 506 corn. They were a big part of the reason we got that huge rally. So watching the money flow, it's like standing on the beach and watching the waves come in. Sometimes you can look out and 4 or 5 waves ahead, you can sort of see it coming. And that's the way I like to characterize money flow. You can see it. Yeah, it's a lagging indicator because it's always a little bit old, but it's still very, very powerful. In Novi beans, we couldn't get the $12 print. We did trade $11.98 3/4. Again, same idea. Hard to believe that just 4 days ago we were down at $11.25, $11.24 3/4 to be exact. So, and again, last 4 days, 1, 2, 3, 4, we've rallied, tremendous amount. Are we going to go get $12.25? I don't know. The old high of the move, that would be $1 off the low. The old high had been $12.14, 1214. That's not that far away from where we're at right now. And if you're wondering what the levels are above that, I do provide that information every week. It's not a secret. You just have to do the homework, and that's what I do. I provide chart analysis, daily analysis, and I can point out to you so you don't have to do the homework. You don't have to go home tonight and sit in front of the computer and go, what was that old high? You can look at my letter and say, oh, Chris has got it covered. He did the homework. That's a big part of the service that I offer. Every day I update these levels. Every day I try and give you the best pivot points. Bullish or bearish, these levels matter. I always have guys telling that's their big idea against their anti-technicals. They don't always work. Well, define work, all right? The fact that these areas can be magnets where everybody's drawn to them, bulls and bears, it gives you a point in time, a fixed point in time to make a plan for, have a plan for. Now, if you don't care about planning, if you're just going to roll the dice, then yeah, you probably aren't too worried about what the old highs were. But a lot of money gets moved around based on what old highs and what lows were, based on what these moving averages are, based on a couple other things. Just very, very set book technicals. Now, there are thousands of books out there about technical analysis. You can read them. You can get so much information that you get paralyzed. Analysis paralysis. I try and keep it very simple. And so if you're looking to learn about that, take a look at my letter. It may be your cup of tea. It may not be. Net changes for the day. Here we go. Dees corn up 6.5 cents, 464 1/4. Novi beans up 5.5 cents, 11.97 3/4. September Chicago wheat up 4.5, 618 1/2. KC Sep wheat up 3 cents, 652 3/4. So the driver really is corn and beans. Wheat is coming along for the ride. Even though wheat, has a pretty decent fundamental story. The least amount of acres that we've planted in 150 years when it comes down to the winter wheat. You've got the issue with what's going on in Europe, where they're having a drought, and that's going to lower their yields potentially enough to maybe impact the worldwide carryout. So that's why that's something to watch. Now, what about China? Well, China was back in the news today, doing a little bit of buying, not exactly what we need, but at least they're showing up. We sold some meal as well, not to China, but that all that fundamental stuff is adding up to one thing. The funds are short. The market is recovering. They are wrong. Now, how aggressive are they going to be on continuing to buy back all their shorts? Because 4 or 5 days ago, they were happy being short. Now they're in pain. So let their pain be your gain. If you're a farmer, producer, this is a mulligan. What are the key levels to watch? Any sale above 1161 in beans puts you in the top 30% of available prices this year. We've had prices of 1214 down to 1055. In D's corn, any sales above 481 puts you in that upper 30%. However, 466 would be the middle of the pack. So there's a lot worse things than making sales here in the middle of the pack. Would it be nice to be higher? Yeah. But what you don't want to do, you don't want to be in the bottom third or the middle third. You at least want to be in the middle of the pack. So 466, if we get there, that's halfway back. Just levels to think about if you're a farmer, producer, and everybody wants to do the best job they can marketing, right? Nobody has the answers to the test before the test gets dropped. So we try and do the best that we can. So those are big numbers to sort of measure your good versus bad cash sales against. Moving on to the protein complex. A lower day across the board. Generally, when corn gets higher, it puts pressure on cattle. Cattle's had some technical difficulties here in the past 3-4 days. We have had a bit of a correction. We're still holding in there strong. If you look at August fat cattle, we did settle lower, but we did not take out, I think that 235 level is going to be the next big battle line. That June 4th New World Screwworm low, that's probably going to be the battle line moving ahead that you're going to have to watch. But even right now, so we're at 238. The high was 250 and change. So if you missed the high by $12, do you really care? What you don't want to be in is a situation where you watch August fat cattle drop back down to, sub 225 or, God forbid, sub 205. Go back to where we were in November when we were down at 197. So don't leave all that on the table. Nobody sells the high, but it's not a bad time to look at doing a hedge if you need a hedge. All right, and a hedge is just a substitute sale on paper in the form of a put. Or if you want to sell futures, go ahead. The problem is when you sell futures and then the market turns around and rallies, you've stopped participating in higher prices and you start setting in a margin to cover the short position. Even if you own the cattle, even if you have the physical cattle, it's still no fun to send in margin money if the market's rallying and you're short futures. That's why a put very often can be a producer's best friend. August feeders did manage to finish a little higher. It was the only thing higher in the cattle complex. August feeders settled right at 360 and change, 360.650. Again, what did we just have? Well, we had a big halfway back move yesterday when August feeders traded 356.60. What's the risk? The risk is we go back down to where we were on June 4th with the New World Screwworm announcement. So that's down at 335. So you're not obligated to lose $30 worth of value if we dive down there without some sort of a hedge. And finally, in the lean hogs, the deferred had been looking like they were trying to carve out a bottom and head higher. If you look at February feeders, though, they're really fighting it out there at that 70-cent level. It looked like for a couple of days, if we took out 79, we'd be kind of away from the danger. If you are a hog producer, make sure you have some sort of defensive put out there. Yeah, we're on our lows, 7, 8 month, 9 month lows, but you don't want to give up another 5 or 10 cents if the market has one last push lower. The managed money, they're long cattle, which is good if you're long cattle. They're bet with you, but they're short, 25, 26,000 contracts of lean hogs. So they're leaning into it. Hopefully they get the same situation that they are in the corn, where they're short and wrong. Hopefully we get a turnaround in the hogs. But again, hope is not a marketing plan. Get some sort of cheap puts down there if you don't have them. Now, vice versa. If you're selling animals into this, it might not be a bad idea to go out and buy very cheap calls to reown it. But again, that's everybody's decision. You don't want to be long the animals and then long on top of it. So when I say reown something, it's if you sold the animals and you want to take a shot at reowning it in case we do get a recovery, you go out and spend $1, $1.50. You don't have to go bananas, but you can sort of set the trap if we do get a recovery in the deferred months and the hogs. So that's it. This is Chris Robinson, Robinson Ag Marketing. I hope what I'm telling you helps you. There's always 1,000 things to talk about. I try and keep it narrow to the corn, wheat, and beans. We will cover other options as well, but at the end of the day, farmers and producers, if you're looking for the key levels that can help you make a decision, nobody can predict the future, 100%. That's completely bananas. But what these levels do is they help you point out potential risk areas. And then if you know what the potential risk is, then at least you can set up some sort of defenses against it in case the market goes to those levels. All right, guys, this is Chris. Have a good rest of the day. 312-638-8868. Have a great night.